Pickleonia.
Oh, okay. Where am I? Fantastic. Okay. No camera, apparently. One sec, guys. Hey, there it goes. All right, cool. How's everyone doing today? Yo, puts on camera. Yeah, it's a piece of shit. Oh, straight great stock ad. Share your secrets. Okay, well, I don't know if they're secrets, but I was spent a large chunk of the weekend looking into the possibility of something which I can't prove, which is irritating. Good morning, everyone. Awesome intro. Thanks. Thanks to the artists of the Louvre that created it. Their union contract requires that I recognize them. So, what are we talking about today? Well, probably a lot of GameStop stuff. Double down. Welcome to Dillionaire. We don't need no facts. Yeah, apparently. Based on some of the DD I've seen over this weekend, facts are definitely taking a backseat to wild speculative theories and fake interviews with former Citadel investors. But you also didn't disprove your theory. True, but I can't prove it, which is, I will share it. I'm going to give it a couple minutes till everyone gets in here. I haven't seen Morbius. I don't know what that is. Any coconut cake? No. I did I did think about it, but no, I was busy. I mean, Jamie will follow active fund pressure to some degree. Although there's much more than that going on. Can you name me the call put indicator in TradingView that I use? There are so many of them. I don't know how you would have any. TradingView doesn't have options data, so it seems like they would be shit. Are my 135 CSPs safe? I mean, you want to get assigned on them, right? Didn't you get assigned on Friday? What do you mean safe? Do you want to be assigned or do you not want to be assigned? Well, I'm not saying that, but welcome to Dillionaire. I appreciate it. Both of you guys, double down. And
happy birthday, Gert.
Penile magic.
Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert get the go.
Jesus, Jordan kicked out. I'm back, baby. Are we in for the mother of all rug pulls? I don't know. I don't know if everyone's as aligned as they have been in the past. There is a position, I believe, in desperate need of liquidity that is not helping the position that's buying shitloads of out-of-the-money puts. As a matter of fact, they don't seem to be on the same page at all. So selling July 120p at open, a prudent move. I guess, if you want to buy at 120. I don't use put call ratio on WeBull. I usually use like Market Chameleon or something like that for put call ratio, but Bar Chart has it. If you want to get it for free. Shit, it might be free on Chameleon. Chameleon has some free data. We re-released it, it bombed even harder. I see. 617? I mean, I hope you get assigned by then. Yeah. I mean, we closed this week under... Did you not get assigned this weekend? We've been live 8 minutes. That's enough blue balling. I've been dying for 2 days now. All right, so last week we saw pretty large orders coming off of the Philadelphia exchange, especially last week. A little bit the week before, but not as much. But the last 2 trading days, a really significant amount. And these were, one second. These were not only large notionally, but very interestingly, far in the money, like deep in the money, calls. Bought and exercised almost immediately. And we also see relatively around the same time. This is June 2nd, and this is I believe this was June 3rd. Yeah, this is June 3rd. And yeah, even more on June 3rd. And we're also seeing large numbers of deep in the money puts being purchased as well and exercised. And now this doesn't have, like, because both contracts are so deep in the money, they have very large delta value, right? And this setup looks very similar to what you guys might remember as being referred to as married puts. Now, married puts are uncommon because their use to generate liquidity is illegal. And it's also tracked, reported live, usually shut down by internal risk management. So this may not be that. I can't prove that it's that. But it does look very similar to like reversals being traded, and specifically off the Philly exchange, which is curious because it's not a huge exchange, and the largest player in that exchange is Susquehanna. So I was digging into if I could find any proof that these are in fact married puts, and I can't. But it is desirable for them to generate liquidity in order to keep CNS churning. CNS, as you guys know, needs constant volume to offset FTDs. And without that volume, it would force buying on the lit exchange. And so to prevent that, you can use these very high delta, not only puts, but calls, to generate volume. Yes, Gaff, sinus. And here's kind of the option activity on hard to borrow and our threshold securities. And this kind of describes the rule 203B2(3) that disallows the usage of married puts in order to satisfy reg show requirements. And it appears that somebody is attempting well, not attempting, they're doing it, but it appears that somebody is trying to generate liquidity with high delta contracts in order to avoid large numbers of FTDs. And if that's the case, then obviously this mechanic doesn't truly close out FTDs. And so it's a possibility that GME could be headed towards the reg show threshold list again. I'm trying to make this sound not super bullish because it's not extremely provable, but there is some indication. This options trading looks very similar to the options trading that occurred pre-January 2021. Not crime, because they're probably not married, right? They're probably so you want to shout crime at it, but the reality is they probably wouldn't take that risk. And they're more likely just generating volume, as much volume as they can. But what's interesting is the other exchanges that are, buying these deep in the money puts and stifling price action and buying the the out of the money puts and building up that gamma ramp to the downside seem to be kind of working on a different page, right? Like they're trying to push price down, but because whoever's on the Philadelphia exchange is exercising all these deep in the money calls every day, we're seeing these massive volume rallies, right? And these big price spikes in the middle of the day as the market maker clears out that gamma exposure. So yeah, XR and it could be that volume is being generated in order to keep XRT off of reg show, and has very little to do with GME itself, right? So it's Jeff versus Kenny. It seems like it a little bit, yeah. Someone wants the price down. Somebody else is spending a lot of money exercising deep in the money calls and then selling all the shares off. What do they gain from not having XRT on reg show though? They gain the ability to put it on reg show again. If they get a large, see, I think that the placing of XRT on reg show is advantageous for them. Because what XRT allows them to do is it allows them to take a big, like when they get a big fat chunk of FTDs, more than they can net off, then they can burn XRT and offset those FTDs. Right? If XRT goes back onto the threshold list, then all of a sudden all of those FTDs are now pushed out and they're settled out singularly every day after 13 days. So you're going to take a big pile up of FTDs and break it down into much smaller pile ups of FTDs. It could be a breakdown of someone who's short. It could be simply positional management and they have everything well under control. We have seen large in the money call purchase and exercise in the past. We are seeing relatively low volume within a channel, which, you know, if you look historically, crushes IV. IV is down, IV 30 now at 110%. So a lot of the things that we assume that they desire are occurring, right? Does this mean calls or puts on Monday? It's a good question. I mean, the options chain indicates that the price will be going down. It controls the majority of our price action. But if deep in the money calls continue to be exercised, that's going to apply upward pressure. And since, as far as I know, the longs are still very much in control of the options chain, and market maker hedging is net positive, large amounts of calls being exercised in the money will drive the price up, and it will drive it up rapidly. I don't know if it has anything to do with BBBY, because BBBY isn't in XRT. It's part of the same basket as GameStop. It's in a lot of other ETFs with GameStop, but it's not in XRT. Would they wait till Opex to do that, or beforehand to keep the price low before expiry? I mean, they'll wait until they have a large enough number of FTDs, and then they'll simply let XRT slip onto the threshold list again, like they did in December. So in December, I mean, XRT's reg showing and dereg showing have all lined up very, very closely with like our major points in the cycle, right? XRT started being used heavily on October 31st, which was, you know, our last big FTD date for the September cycle. It was reg showed finally on December 17th, which is the futures expiry for December of 2021. It was placed on threshold on January 7th, which was the morning after that really weird run that we had, and removed from threshold on the May Opex T+2 date. So, you know, all of XRT's cycle is so closely aligned with GameStop. And, you know, GameStop is the heaviest weighted stock in XRT, but it is not the highest market cap, which makes no fucking sense, right? Considering XRT is supposed to weight all of its assets equally. XRT's options volume is absurd, almost 370,000. Let me look. I actually have it open here. 357,000 open interest on XRT. 278,000 of that is put OI, which we know they use to mark long. So that's like 27 million shares of something marked long, right? I'm sure there's, you know, just some regular puts in there as well, but not many. Also, XRT put open interest went up 8% yesterday, or Friday. that's having these huge changes in OI. Since May 20th, the Opex expiration, XRT has loaded up for 12, 18, 21, 30% puts. More than it got rid of on Opex. It's added already. So notional OI on the 20th dropped, or the OI on the 20th dropped 21.5%, and they've added a little over 30% more OI since. What we see on Monday, I won't have the OI, like the update for tomorrow, till tomorrow. So I'll try to provide that in the morning DD if JFresh isn't sleeping. If this battle continues into Opex, what would occur then, if anything? I mean, it would cause more upward price action. They still haven't shed the FTDs or the OI off of XRT, and it's only building. It doesn't seem like they're able to push it through an ETF settlement period. Remember, all the ETFs have their dividends. They have their quarterly rebalances. This is the yearly rebalance for the S&P indexes. And then shortly after is the yearly rebalance for the Russell indices. Yeah, lots of very bullish and very bearish things. It's difficult to navigate. I agree. As long as OI continues to drop, then I would say the people with the out of the money put interest are still winning. I'm sorry, IV. The IV is now 110. It actually went down more on Friday, which is crazy, right? Because we had that huge intraday run, and we ended the day up quite a bit from our low. Do you think they're doing this deep in the money call shenanigans to slam the price hard before Opex? What do you mean? I mean, what they're doing is they're buying, they're exercising those deep in the money calls for shares. Right. And then they're using those deep in the money puts to sell those shares. And they exercise, right? Like, so, you get 100 shares at $60 a share, and then you're, minus premium, and then you're, exercising like a 280 contract, and you're selling those shares for more than market value. And most of this is just volume generation, right? Like, it's not really net profitable. It's kind of a neutral, like a married put is really like a neutral position. It's just there is no profit to be made on it, but it does generate volume. If people buying calls win, it's January part 2. If they don't, we go down, I think. Potentially. I mean, we still need to see a significant number of FTDs on GameStop itself, and our reports are 15 days late, which doesn't help. Or we need to see GameStop go onto the reg show threshold list again. Now, I don't know if they've just tied up a lot of liquidity getting XRT off threshold, and now, that liquidity is going to flow back, and they're going to be able to lower the borrow rate a little bit over the next couple weeks. I don't know if they simply need the volume, and it's because we can't, we only have so much data from the options chain, but I don't know if, like, there's no confirmable way to say that these are married puts and that they're using them to satisfy some sort of obligation. I highly doubt that's true. We can say that they are generating volume with them. It does cause buy pressure, and with the positive hedge, that's going to cause upside movement. There any chance State Street gets implicated in some sort of crime, given that they're the managers of XRT? I mean, they haven't in the last 10 years. The SEC is well aware of what State Street does with XRT. The SEC has multiple reports over the last 10 years regarding XRT, and have done little to address it, if anything. They don't want to shut it down, right? Liquidity engines, like ETFs, are beneficial to the stability of the market. So as long as those ETFs are able to maintain their NAV, or their net asset value, then the SEC doesn't really give a shit what they do. Could it be they know exactly what they're doing? One entity providing liquidity while the other entity is taking advantage and buying cheap puts. That's possible. So we'll likely hit that put pile before the 17th. They're not getting rid of them. We know that much, right? That's the most concerning part is, with the price at 130 and those puts losing value due to theta. Why have they not pulled some back? I mean, they must be extremely confident in the position to carry it into the last 2 weeks. It does reduce IV. It does create liquidity. They're able to then, sell those calls in the money, which also drops IV. SST had a lot of deep in the money calls for shares. They were able to keep the price from running because of it. Yeah. But why would GameStop's price be running if they're not buying? Right. That's really where that gets confusing. Like, and there, there was a definitive short position, that did not want to buy and did not want to close out, and were, unwilling to give up. But with GameStop, all of our upward price action is driven by the same funds that, push the price down. Is there a way to see those deep in the money calls come in live to scalp some zero DTEs? I found very, very few accurate live options flow services, so probably not. I think someone's bullish on Jimmy for a potential split and a dividend coming soon. It doesn't look that way. I would say that what we're seeing right now, besides the options action before January 2021, is also very similar to the options action on AMC before it ran. So it could be somebody positioning for a long flip, which would also make sense. Conversely, if they do this while the hedge is negative, we would see the opposite, right? Yeah, because the effect of the exercised in the money puts, the married puts being exercised, would drive the price down more than the exercise of the long options would push it up. And it would be that's the edge, right? Is that market maker like net delta. I can't reiterate enough how little I think that they are using married puts to satisfy reg show obligations on a lit exchange. It is illegal. The SEC automatically tracks it. The fining is automatic. They're risk management teams and they would shut it down internally, and likely self-report it before they got fined. Yeah, so I don't think that we're seeing something very similar to married puts, but not married puts, right? Some variable is allowing them to dramatically reduce their risk position on this. Yeah, gaff. Maybe something like DRS, knowing exactly where 13 million shares of the float are going to be at any given time probably is a big help. 24 and me, thank you so much for becoming a Cornishad, man. Cornishad. Cornishad. Yeah, you mentioned it. Well, because it's very similar. Well, you have to think, okay, if they're not using married puts, right? If that is undesirable or it's not advantageous, why? Why? I mean, there's no profit really made. There's no money lost. So what do they get at the end of all of this? They get volume. And what does volume help them do? It helps them net off FTDs through CNS. So why do they have so many FTDs that they need to go this extra step to generate volume? And that brings me to, GameStop is in a little bit of a liquidity crisis. And GameStop has and liquidity crises, those are what create FTD squeezes, right? And FTD squeezes are the backbone of any other kind of squeeze. So can they manage it? Probably. Will nothing come of it? Most likely. But it's something that we should note and pay attention to. It could be separate entities. That's possible. And then we have to think about what's causing the liquidity crisis. Valid. It's a huge help. This isn't necessarily new knowledge, although I guess the idea that it's now 3/4 of continuously increasing DRS position, that knowledge would de-risk for sure. Yeah, I agree. It feels like the overall market isn't going down like the shorts want it to. That helps them a lot. And that may be the exact thing they're waiting on with their out of the money put position. They may be waiting on, this relief rally in the overall market to end, which it will, right? The economy is not improving. The Fed, try as they might, are very unlikely to be extremely successful with their soft landing. So we will have more downside. The downward trend of the market is likely to continue. They can place a lot of confidence in the fact that those active funds will flip and begin working with them instead of currently how they're working against them. And it's every little bit that counts, right? If they don't want to apply a lot of external force to drive the price down, then every little thing on their side is beneficial. Because it's the culmination of these outward pressures that lead to the extremes of price action. Their puts are older than mine, so I have to believe they've lost half their value or more since they were opened. I feel like that's enough info for me to keep holding them until we drop. Yeah, I mean, I agree. I'm not getting rid of my puts. I mean, I didn't get rid of them Friday, but I probably won't get rid of them till later in this coming week, or maybe even the following week. Here's the thing. No, DRS doesn't cause MOASS. It allows them to handle their positions more efficiently. It allows them to control volatility and choose the direction of it. The more that gets DRS, the more control they have because they have more money. They also know what they're fucking doing. And they're one entity acting with one purpose. How long before AMC ran in June did we see this similar options activity? Through the very end of, starting at the end of April. And then it started to pick up a lot around May Opex last year, which I don't remember what date it was on. It was like the 24th or something like that. So the yearly rebalance, that much of a liquidity crunch? I mean, they just don't have a lot of control over that aspect of the ETFs. They can't choose what's in the index, what's not, what's moving in, what's moving out. That rebalance can upset their positions. There's also dividends due. So, if they're short the ETF, 20, 30 million shares, they have to pay 20, 30 million individual dividends. Can DRS be causing the liquidity issues? No, I think they're causing their own liquidity issues, frankly. DRS tells them exactly how much liquidity they're working with. If anything, it makes it easier to manage the position. I don't think DRS is at a level yet where it's driving the illiquidity. There are still far more shares outside of DRS than in it. If we ignore the option chain and market mechanics, from a TA perspective, aren't we dealing with a double bottom in the 80s and support test bounce off 125, setting us up for a run? Possibly, or we're looking at a double top and a failure. The decreasing volume on the second test implies consolidation. Our current high is, or our last high is lower than our previous high, which implies a downtrend. A rejection here would likely lead to more downside. So, it depends on what time frame you look at it, but then shorter time frames bearish, longer time frames still looks pretty bullish. A lot will depend on GameStop's ability to break into higher upper channels. But remember, option support above us is kind of limited. We only have about $17 of range to the upside before we hit Gamma Max. And so unless a large amount of, options buying comes in, there's nothing to sustain price movement above that point. So we're very close to our cap, kind of far from our bottom, which is usually not a good place to be. That's on the peculiar swap post on PiFi. Looks bullish. I mean, it's not really bullish. It's, first of all, we know about the swaps on GameStop. Most of them are cash settled. They're not. I think the biggest mistake a lot of people assume with swaps on GameStop is that they're delivered via securities. They're not. Most of those swaps are not. They're going to be balanced based on the spot price quarterly. But that doesn't cause any buying, right? Like they can just cash settle that difference, completely irrespective of, the spot market that the contract is written on. So they don't need to buy GameStop shares to satisfy a swap. Like I've said this in the past, those positions, whatever they may be, moved into those swaps, moved into ETFs, are no longer GameStop positions, right? While the ETFs still have an effect, and that's because the ETF comes back and buys the stock on the lit exchange. creating, you know, our Opex cycles. With the futures and those they don't. There's nothing, right? I still think they're a thing. I mean, ETFs very specifically use single stock futures in order to maintain their NAV. So there are swaps that do affect GameStop, or well, futures contracts that affect GameStop, but they're not necessarily like these large TRS positions that we see. It's very interesting that GameStop has almost as many swaps on it as Apple. But the volatility on GameStop is very profitable, right? I don't think everyone un-DRSing would do anything either. That would just, you know, maybe make the stock even less predictable. It would reduce volatility. So BBBY update, not even some copium. Wait for Opex. If it breaks its upper, first of all, the put wall expires on the 17th. So, you know, there's plenty of room for it to run after that period. Once that put wall's gone, you know, no more stuffing it under $10. Right now, there's just an amazing amount of put pressure on the price of BBBY. It's being suppressed actively. Now that could very well be for long positions to move in. It could be because they don't want the price to move higher. Maybe they want, you know, the retail holders, however few they may be, to sell out. It's an easier stock to manipulate because it's far more liquid and it's cheaper. Think GameStop February 2021. Like, just slammed down to the floor. They're not letting shit happen to it until they're ready to let something happen to it. So be patient. I do suspect that Ryan Cohen will buy more of it in the future if the board does not follow through. I don't think he is going to take a loss. So those 20 Cs are bought in Philly for 617. Why buy contracts with so much theta if the play is just to exercise them immediately? I mean, they'll buy whatever in the money contract presents the most arbitrage value for them. So if they can attack, you know, a variance in the pricing or a beneficial spread, they will. I don't think it really matters which contract, as long as it's high delta and they can get it cheaper than the current spot price, right? Which is possible when buying and exercising in the money contract. Sometimes your buy, like your premium plus exercise, is cheaper than the at market price. Those opportunities aren't really available to us because we don't have, you know, high frequency trading. We don't have live options data. So we can't, like, retail can't do that effectively. Sometimes you can find like a deep in the money call that's a little mispriced and take advantage of it. So we won't see shorting until deep in the money calls stop coming in. Probably. I mean, we're seeing shorting. They don't let it run out of their bounds, right? We've seen them slam the price a few times now and prevent breakouts with deep in the money puts, but not a lot, right? It's not like they're loading up on them and trying to slam the price down. You know, they're buying them as they need them to suppress the price. Our charts these last few days look similar to March 21 before the big run. Yeah. And we are approaching the like the futures rebalance period. And it's very possible that, you know, forward contracts were written in January or June of 2021 that are now due 1 year later. While you know, a prime might not have been willing to take on the risk for 5 years or 3 years, they might have been willing to take it on for 1. And if that's going to be rolled forward, then that could generate, you know, positive price action as we move into the futures rebalance period. Which I believe is this week. Betty Swolox, thank you for becoming a Dillionaire. I appreciate it.
Happy birthday, Gert.
Maybe a big run is coming, then a hard rug pull after, hence their puts. They would have to rug pull it before Opex. Before they cover Opex obligations, which would be tricky. I mean, they could. Yeah, they could start covering the XRT puts now. That's possible. If they aren't successful pushing us down, a $100 price at the start of June Opex run pushes us to 250. I mean, that's possible. Yeah, if we maintain these price points and we get an Opex run, a sizable Opex run, we could definitely move up pretty high. Can you lie on IBKR? What do you mean? Like for options? I mean, I would suppose that the option is present to do that. Of course, you know, you should be honest with your brokerage about your risk tolerances. I'm holding a 610 105cc. Would you have thought I would be assigned early? And does assignment typically happen on Fridays and weekends? I wouldn't. Nah, I mean, you're pretty deep in the money in 1 week to expiration, so it's possible that you get assigned. It typically happens on Friday and the weekend, yeah. It's pretty rare to get assigned intraday, like on a weekday with Friday expirations. They covered Opex before Opex dates. When? They've never done that. They have never fully covered Opex before the Opex T+2. Even in Freg's day, you know, the day we got rug pulled was still T+2. And we still went up that week quite a bit. They covered a lot of it before Opex. But remember, you know, the thing about those Opex obligations, they don't know what they are until they expire. So they can hedge, but they can't predict. Fuck yeah, Natty. If BBY hits $20 for June Opex, I will reduce my cost basis a bit. How quickly did the price dump during Freg's day? Fast. Like $30 in 30 minutes. It was fucking ridiculous. It felt like that. I mean, it was slower, but the rug got pulled so fast it wasn't even funny. Thinking Tesla will bounce Monday and never fell through its 700 resistance. Yeah, I do. But you have to watch 708. If it fails the test at 708, it's gonna drop hard. So you have to be really careful with it. And a lot of that price action will probably happen in the pre-market, which makes it a little less reliable. 708, 725 are the upsides for Tesla. I thought it was kind of funny. Well, yeah. I know you did. And everyone lost a lot of money on Freg's day. I mean, not everyone. There were people that actually made it out really well, but they were smarter. What happened Freg's day, you know, was they hedged a lot of their potential exposure going into, November 19th. And what that meant was that their actual realized gamma exposure the following week was minimal. So we saw the price run up Monday and then into Tuesday morning. And, everything looked great. And Tuesday morning it opened, peaked, and just fell. So by hedging in advance, they reduced their exposure, which I don't think was, to be fair, very high. They'd already reduced a lot of exposure earlier in November, on November 3rd, when BBBY announced their share buyback. But we didn't know how to track any of these external elements back then. That's stuff that we learned through the abuse of December and January and February. Always adding more, right? Are they hedged for an Opex run like last time? That's a good question. I don't think so. I think XRT put interest is significantly higher than it was in November. Or it was actually still quite low. Remember, that was before they even put XRT on Reg Show. They were simply just using XRT to generate as much sell pressure through that entire cycle as they feasibly could. I came out at 0, so I was surprised when everyone was sad. Some people got, I got out at basically 0. I know a few others did. I know some people were out Monday and made a shitload of money. And then a lot of people, wanted to see more. And usually we do, right? Usually we see that positive delta change roll up and keep moving. Like we did in March, right? Where we see the, the positive pressure continues to exert force onto the market maker, which then causes more FOMO. And, we get that feedback loop. And in November, dead. Nothing. And I think really in November there was more obligation, but so many calls had gotten sold out the previous Friday, because the previous Friday we went from like 200 to 230. And I think a lot of the OI that was open for the run got dumped here. A lot of people took profits, which, lessened the amount of exposure the following week. And then Monday, when we moved up to 240, 245, even more of the chain got sold off, and not a lot was coming in, right? So we didn't really see any FOMO coming in. It was mostly just the options that were in place at the beginning of the run. And that cycle we actually hit gamma max, which we weren't even tracking actively. But we hit gamma max on Monday, and pushed through it. And so we should have been prepared for a drop the following day, but it wasn't something we were following at the time. Options were so cheap back then. No, they fucking weren't. The options for the November run were expensive as shit. I think we look like a mini Fregs day for next week if they hedge all the GEX from last week. Yeah, it's possible. And we have the puts open below us, right? So remember, if we cross to the downside of gamma and delta neutral, which are rising, right? They're rising up to meet the price action. And we cross to the downside of those, and that market maker hedge flips on us, we can move down very rapidly. $525,000 of the $90 strike, June 2024. Apple moving down to $90 sounds like a market crash. They could be protective though at that price. Okay, so they pre-cover Opex this next run, then rug pull on Opex, right? Like last time in November. I mean, we'll be able to track it this time, Johnny. This isn't, we're also better at this, right? We know where gamma max is. We know when the interest in the chain is starting to fall off. We can track their positional flip through gamma neutral spikes. It's not, we're not in the same position we were in November. We know more. Are far dated call positions increasing or only weeklies? A little bit. But mostly weeklies. Retail's playing it very cheap. I think a large amount of the retail currently playing GameStop is not retail that has been involved with GameStop options on previous runs. And they don't know to buy theta. So we're not seeing, I mean, we're seeing some positions load up for July now. It's coming in slowly. But far more of the retail positions are weeklies. Lots of Wall Street bets action, right? And that's because people that are playing the cycle and know what they're doing are buying Julys and Octobers, and they're buying theta. They're buying not very far out of the money, and their build up is slower, but it's there and it's building. It'll take some time, but it's building. And we've got 2 weeks more options buying. I mean, also usually, right before the cycle does when we see larger entities jump into those calls and drive up the OI. So these lower prices, more retail could buy into a run, unlike November. Yeah, that was one of the problems. November, we were already trading at 200. It was really hard to load up on calls, right? It's not like we were trading at 120 or 100. Whatever happens, we'll still be here. I know. Wouldn't the hard drop hurt short hedge funds side in terms of keeping IV low? Yes. Unless the hedge isn't super volumetric. I mean, they're building it up to the point where there's going to be some volume. But don't forget, they can try to crush it on the other side, right? We've seen them do this in the past. Actually, if you look at the Renko on the 30-minute, you can kind of see exactly where they crush IV. See these IV crush periods? The price action is really obvious here. If we go back, we can see it happen here, and we see it happen before the Feb FTD run as well. See how tightly bound the price action is for multiple days. This like very flat trading in a narrow range on low volume. This is how they crush IV. So when IV gets too out of hand, we almost always hit a period of price action like this. Renko whale teeth. Yeah. Well, Renko makes it really obvious because of the way it fills in blocks based on volume. I mean, it's not trust me, bro, right? Like the data's there, Johnny. Smartass. If you don't trust it, don't play it. No risk, no reward. So 17.6 puts should cover any significant downside, and 1.7 calls should cover any T+2 Opex GEX. $17 puts? What the fuck are you talking about, Cucumber? Robert Dole, thank you so much for coming along, Johnson, dude. Can you rephrase that entire statement? Oh, 7-1. 6-17 put should come. Yes. Okay. I see what you're saying. Yes. Okay. Yeah, I get it. They're flipping the dates. Got it. Here in America, we put our month first because it makes no sense, and that's how we like it. 7-1 may not cover all the upside, though. It should, but you're going to have a hard time finding OI on that. It's a weekly contract. You're probably much better off with July 15s. They'll have far better liquidity and a better spread. Chances of turning 25K into 100K best realized through far out of the money IV plays or near the money long spread. I mean, that's just risk, right? Both of them can turn 25K into 100K. One of them could turn 25K into like 300K, but it's way riskier and harder to manage. The only day that matters is the 4th of July. Whatever happened to the executive order causing MOASS? Does Fidelity allow spreads on GME using margin? I have no idea. I don't use Fidelity for options, but probably. I don't see why they wouldn't. Any downside to buy weeklies on the week after Opex if no run up? It's almost guaranteed. Isn't it almost guaranteed money? I mean, they're super risky is the problem. And you know, sure, you can make profits off of them, but you're usually buying them at a premium. Like you know, you're buying them for more money. They have theta decay. Weeklies are kind of shit, especially if we do hit a period of, you know, that feedback loop where the price continues to rise into the week following the OPEC settlement, like we saw in March. You know, in March, OPEX occurred on the 18th, you know, and the settlement of OPEX began on the 21st, and then we ran all the way through April 1st. So, you know, a weekly there would have seen a lot of price improvement, but it still would have been kind of shit. And it would have cost as much money as buying a longer dated call on the 16th. Yes, I know. I understand you mean following June 17th. We still went up $50, like $50 from the low in November, Robert. And I can show you. This was the 19th. And then all day Monday we ran up. And then we actually peaked Tuesday morning. And then it was just straight downside. We lost $40 in a day. But yeah, we did run the following week. It was significantly less than any of our other OPEX periods, but we did run. This is our weighted VWAP from March of last year. I don't have any price targets yet. Not until we approach OPEX and we know what Gamma Max is. Gamma Max on BBBY is infinite. currently. It just needs to break out above those puts. And then where it goes is going to be very hard to determine. Up. Gamma Max on GameStop's at 150 right now, but that could change dramatically by the time we approach Opex. If they roll their XRT puts on June Opex, will we see it Monday morning in the options chain and know that VWAP is incoming? Yes. We'll see the percentage of OI dropped, Silent Killer. So yes. Can you explain what factors makes far out of the money 950C hard to manage during OPEX? So yeah, I mean they're volatility plays and they're extremely sensitive to volatility, right? So you know, as the price is continuing up, the price of those contracts will spike very hard. But if the price hits a resistance and is rejected, the contracts will lose a significant amount of value. So you have to sell them on the run up. Like you have to sell them right before the peak, which is very difficult to do, and it doesn't give you a lot of time. What does it seem like most of our cycles OPEX on a federal holiday week, which always fucks up settlement periods? Yeah, it is. It is on a holiday week, and it does fuck up settlement periods. But I think we're prepared for that. We know that settlement can extend out through Friday at market open. It will still occur within the week following June 17th. No, June 24th pre-market. Iron Archer. They get an extra day plus the holiday. So they get a deferral, and they get a deferral day for settlement plus the day that the market's closed. But someone who's pricing says, why are you typing in single letter sentences, Stephen Gerkel? Like single word statements. Gamma max for BBBY is theoretically infinite. We don't have a stable gamma max right now, so we don't know. All of the calls on BBBY are super far out of the money and very far dated. Like the vast majority of them are like leaps and they're high strikes. Single word, it's the worst. I can't follow it. Okay, you know what? I don't need this kind of abuse. I wish I could FTD my homework and turn it in 35 days later for a better grade. Like, yeah. I found a single word that will make sense for you. Band. Band. You know, you and JFresh have very similar mindsets on what I should do with the community here. And the answer seems to be ban everyone. You have all my words, Garrick, not just teasing one at a time. Enjoy your pool. Thanks, man. So BBBY could run like GME did in January. I mean, if someone comes in and buys a shitload of it, yeah. It's at like $10, John. I think the thing that would upset me most with BBBY is if they're able to just suppress the price through Opex, which would be impressive, but I wouldn't put it past them. Is IBKR preventing short sales on GME significant, or was it nothing? I mean, it was for Friday. It literally just means they ran out of short inventory and they were not allowing short sales anymore. We didn't see, you know, everybody being like, I'm being margin called on my GME positions like we did in January, right? They had no inventory. They shut off share lending. It's very simple. You know, it's cool. Yeah, BBY, like IBKR has no inventory. Awesome. They haven't really had any inventory for 2 weeks. It's just Friday, the day ended with no available inventory. They opened it back up Saturday, right? By like Saturday night, it was back to normal. So I don't think that's indicative that we're seeing a repeat of IBKR's actions in, you know, January of 2021. Not yet. You got it, Johnny. See you later, man. Butterfly meme, is this risk management? I also want to make another note because I know it can't be helped, but I still see people do it. Don't try to ghost my positions, okay? I will lose $20,000 on puts in order to hedge the $700,000 or $800,000 I could lose from a $20 drop. It's not the same. I also have a straddle on GameStop right now, so I'm hedged both ways. I don't, right? What about when we accidentally buy the same strikes and dates as you do before you do it? Well, that's not the same. I see heavy put OI in August. A lot of it was in June 17. I haven't checked the like current OI for BBBY this weekend at all. I'm still in the 500 to $1 million challenge. I'm down 100, so don't tell me about risk. So is the bull meter looking for before June Opex to give it an all-time high? I mean, we've got to see an increasing gamma max on the run, significantly increasing gamma maximum on a run. What would you say are the 3 most reliable technical indicators? Price, volume, and MACD. So horizontal resistance, volume, and MACD in that order. There's other things that are useful, but learn how to use those first. They are all 3 are by far the most reliable indicators of forward price action. Got a fucking mosquito bite on the top of my foot, which is the worst thing that's ever happened to me. No, that's not true. I got a mosquito bite on my ear one time. That was the worst thing. We were close to or a bit under GN and the call put flip a couple of times, but didn't drop. No, we weren't. We hit 115.50, which was $1 above the put call flip. GN, while the raw data kind of shows it being at like 120, I think JFresh is a little closer with this smoothed. version, and GN is probably still, you know, in like the low 100 range. First off, Gurg, hi Gurg, what's up, Dork? Secondly, thoughts on the screen cap I just shared in QuantCord. Ooh, what do we got? We got tasty things. What's this? Ooh. Hold on. %49 of options volume traded between market. 52% of put volume. Yeah, I mean that kind of coincides with what I was talking about. If that's what you're referring to. To the tune of "Oh Christmas Tree," ban, 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 oh ban, 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 the pours off this stream. I mean, the whole stream's been about GameStop, so I don't want to. That seems not nice. Just because they're poor, they should still know about their stock. Is rolling an option just selling it at a loss and rebuying the same contract on a later date, hoping to recoup losses and make a profit off of your thesis? Is rolling an option selling it at a loss, buying this? I mean, you don't have to buy the same contract. You can shift the contract. But yes, it's buying more time, essentially. That's what you're doing when you're rolling an option, is you're buying more theta in order for your thesis to pan out. All right, later, Gaff. Have a good day, man. Is your outlook on olives as a side dish change over the weekend? I mean, still not canned olives. Not that I don't like a canned olive, you know, I do, but I feel like you could do better. I feel like I'm missing something on this. Wide volatility, VWAP 131. Win feet picks? What? That's not happening. How can you measure the increasing, decreasing volume so accurately? There has to be something better than watching the big green and red volume candles. No? I mean, you can count it. And you're also watching time and sales, right? When you're looking at volume. I hope. Not just the candle. Candlesticks are just displaying the information. How are the school stock vids coming along? I haven't made another one yet. After the covered call one. I really fucking hate making videos. I'm not gonna lie. I'm not gonna fib to you guys. It's the least enjoyable YouTube thing. I don't mind streaming. I like streaming, but making fucking videos is just bullshit. Which convinces me that all YouTubers are just people who are good at making videos and not really necessarily knowledgeable about the subject they're making videos about. Huh. Because the shittiest videos always have the best information. YouTubers hire editors. Ah, that sounds terrible. Lander Lifts, thank you so much for becoming a Dillionaire. I appreciate it. Guys, if you became a Dillionaire today, message me over on the Discord and I'll get you set up with the Country Club. Pierre, you as well, man. Appreciate it. Power E-Trade has options, time, and sales now. Pretty interesting. Oh, that's cool. Yeah, tracking flows helpful. That's about doing the lesson as a stream and then just save the vid. Maybe, but it tends to like veer off into other subjects and shit when I do that. I mean, if the price hasn't dropped by the 10th, I can't see them carrying them another week. Like, they've already lost. They started buying those positions on 512. I mean, they kept buying them, right? So they've been averaging down. Don't forget that. But I mean, like, how long can they carry them for? You know, reasonably. It's getting a bit ridiculous, right? Dillionaires, Discord connections, YouTube login. Yeah, that's pretty easy, but a lot of people get confused if they haven't used Discord before. Hello, Pierre. How you doing? Purr? Is it purr? Like a cat? Would it help if you made the video like a live stream with someone typing same like questions over the top of you explaining? That could be arranged. Did Gurk already go over the theory he was working on? Yeah, like pretty much from the beginning. I haven't given up on it, but I know that I can't prove conclusively one thing or the other, unfortunately. I tried very hard, but how many instances has short hedge fund multi-million-dollar puts been blown up on GameStop? 0. Yeah, they've always printed their puts historically, but that's not necessarily indicative of future price action, right? They've had small put positions blown up when they're just like trying to manage like daily CNS clearing and they don't want the price to go up too much. I've seen those get blown up. But I've never seen like their big, you know, like gamma slide positions get blown up. Those almost always print for them. Nope, like a cat. Awesome. I re-rolled on Friday. I'm down 6%. I can't understand how they would hold past Thursday. Yeah. Have they ever rolled positions like this before? Yeah, I mean, they were building them up into the November run a little bit. They built them up a lot in December. And then we saw them do this again towards the end of February. So, you know, it's not an uncommon position for them to be carrying. They usually do take control of the price in time, but you know, the difference here being that they don't have the market maker on their side, which they've had in all the historical examples. So in all the historical examples of this happening, you know, the market maker net hedge has been aligned with their puts, and this time it's not, and that's what's a little bit different. See you later, Stachel. Why is the song playing at 75% speed? It's not. It's full speed. Yeah. What are key data points you focus on time and sales? I mean, I'm just looking at what kind of orders are coming in. Like I'm watching the candle and seeing how much volume, and then I'm looking and seeing what the orders are. That's more for day trading than swing trading. It's not really that important for swing trading, because swing trading you got to take the average, and it's That's far better and more accurate. It's bullshit because they short. What? What's bullshit? I have deep in the money cover call expiring this week. It's too far below my cost basis to let it get exercised. It's a terrible idea to roll it way out to a leap. I mean, it's not ideal to, you would have been better off doing that when the IV was higher, because then you could have bought it back on the crush. Like last week, before earnings. I mean, it's risky, and if we run hard, you might just get exercised anyway. But I guess you could get exercised higher or nearer your cost basis, which could be better. How do you think a surprise 10-day split notice being submitted can spin things? Do you see an optimal submission date for max Opex impact? This week, I think, would be optimal if they wanted to split while the price is up. That's on the SPY for next week. I'll cover that and like the pickles picks. I haven't done any analysis on the SPY yet this weekend. So I'll do that today. I mean, right now, like roughly, it looks like it hit that 1860 high. It's very possible that the price action begins to break down. We have CPI data coming this week, so we'll likely see some stagnation. If that's not bullish, we could start moving down into SLD the following week. Okay, I'm back. Laptop died. Is the long squeeze over? It's better to exercise above your cost basis. It's better to exercise above your cost basis. I mean, yeah. No. What is this? What are you going on about, Steven Gerkel? What's your deal, dude? What's the thing you posted in Jimmy chat about reverse split? They don't need 10 days notice for that. No, they don't. They don't need to provide any notice of a reverse split. He's a bot. That's some actual city documents showing Evergrande defaulting on specific notes, placing it in default. Who gives a shit? Course has infiltrated the stream. Hey Greg, how are you? I'm doing alright, Mel. Do you still have BBY puts? Yes. Where do you see it going moving forward? Thanks. Enjoy your day. Let's take a look at it. My puts are at 70. It's starting to look good, right? It's down to 80. I think the downside trend will continue with the market dropping out. I hope I have enough time. But yeah, I mean, the earnings were still dog shit. So I think it can move back down below 70, hopefully before the end of this month, and I'll be okay. I think I have enough time. What are you eating today? Nothing so far. XRT off Regsha, a massive put position sounds like ingredients for downs, not ups. No. You know, we've run with XRT off Regsha every time, right? And the compounded put interest on XRT is higher than it was in March already. Or very close to as high as it was in March. It's going up it went up 8% on Friday. RC and Pulte building the gamma slide to drive the price down so we can reverse split. Amazon split just happened, and I want to do CCs, but I'm unsure how long I should wait. I would wait till price action stabilizes a little bit, or sell CCs at a target where you'd be okay selling your shares. BBBY looks like there's very little OI left for puts in June. Looks to have been rolled to August. Looking at the large OI there. Would this mean that BBBY will be suppressed till then or run now? I have to look at the gamma neutral data and stuff on it, but they could try to suppress it until later, till the next run, to the next Opex. I don't know if they'd be successful with that. It could just be marking long. I have to look at it. I haven't really taken a look. I mean, I know a lot of you guys are invested in BBBY. I just don't care about it that much. It's more like I just bought it for it to go up. I think it's undervalued. So the near term price action on BBBY isn't that interesting to me. But I'll check it out, and I'll try to put something in. I'll try to put something up for you guys, because I know a lot of you are pretty deep in BBBY. I think it'll run on Opex regardless. If GameStop runs, it will as well. And more important than the puts on BBBY directly are the puts on it through ETFs. And its biggest ETF is IWM, which is kind of hard to track put OI on because it's so heavily traded and there's a lot of noise. There were a decent amount of ETF FTDs in the last report for BBBY. I'm out of MOASS. When would you think would be a good time to buy back in? After SLD? Probably. Yeah, I mean, if the market comes down, that's going to be a good time to go long on anything if you can time the bottom. CPI data comes this week. I don't think we have any Fed shit this week, though. Pretty deep. We here in chat own 2/3 of all August and Leap calls on it. I don't know about that. There's a lot of institutional interest in BBBY also. I have August calls too. Do you have an idea what the GEX is on Monday? I think I could tell you. One sec. I'll put it in the daily tomorrow also, but so GEX is significantly down going into Monday, 1.1 million per dollar, which means we didn't see that. We didn't see a large amount of exercise into close this time. I'll wait because I can update in the morning, but hold on. What was our total change? And we closed down 30 cents. So yeah, not good. Doesn't look good going into Monday. Not a lot of gamma exposure. But there could still be gamma exposure from the previous day. Remember, that can still carry over into Monday. But yeah, I mean, if you consider that Friday we had 12.4 million per dollar increase, and Friday we had $1.1 million and no notional increase in price from, like, we closed down Friday. It's not a good look. And it is likely, as I suspected, that, you know, with I still think that's my current best analysis, is that, you know, they were waiting for that call options, like that option volume, to fall off of the chain, because why fight back up against it if they have theta on their side? That's possible, Ryan. Yeah. How do you mark supply and demand zones? I really don't. I just use horizontal resistance. I mean, are you referring to horizontal resistance? I base it off, like, the amount of volume traded at a resistance. More volume traded at that resistance, the stronger the resistance or support. I usually, if I'm marking them on shorter time frames, I'll use Henk and Ashi, because the smoothing effect helps narrow down their price range. Christmas till Christmas. No problem, Gurkle. I don't understand that indicator. Also, I've never seen it doing anything. I mean, it's pretty accurate in tracking our like gamma exposure the following day. Within a couple, like, 1,000 shares, it nails it. It nails, like, the GEX volume due by the market maker. Zoom in for MOASS. Thank you so much for becoming a Dillionaire, dude. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream.
Yo. Let's get it. We're not a cult, yo.
Yeah,
Just some
so
pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a
so
cult.
BBBY on NASDAQ limits internalization.
Not a cult.
So you know, there's no DMM, and so it's very hard to internalize pressure. I think that's one of the reasons we see such crazy breakouts on BBBY. Like, when it breaks out, they can be like nuts. Like that one day we just moved up to $18 out of the blue. Is it because on GameStop, you know, they would internalize and smooth out that volume, but on BBBY they can't. And so when it does break out, it does tend to be more volatile on its breakouts than GameStop. But that also means that, you know, the peaks are less reliable and they're not sustained as long. You can see a divergence on the price and value in the volume candles. Yeah. Frosty Balls, thank you so much for becoming a Cornishon, man. All right, were there any other questions? every month, walking. SLD occurs every month. Third Wednesday of every month is when it begins. I just watched the stream again to take it all in. It's a lot, I know. So I guess I could wrap it up with like, where does that leave us? It's, you know, with the Knave Gex dropping and the put positions in place, I still think that a move to the downside has a higher probability chance. We will see how long these liquidity issues persist, and the exercising of these, let's call them high delta put call positions. Obviously, longs still remain in control of the chain. As far as we know, that information will update tomorrow morning. The potential, I would say, for a downside move is currently still higher than the potential for an upside move, but that's also been true for several days now. And we'll see how much OI has dropped off and shifted the trend in the options chain as soon as that data becomes available to us, which will likely be tomorrow morning. So we'll have a better idea tomorrow morning, but yeah, right now it doesn't look strong. And then, you know, obviously for re-entry into June Opex, we are looking for lower IV. We're getting close. We're at 110% right now. The ideal range is below 100. 110 is still a very good price. So even entering positions now isn't so bad unless, you know, you lose delta. So that's the risk of waiting or buying into, or not waiting long enough or buying in too soon, is that, you know, you could lose a lot of delta before a run, which means you're carrying like very negative contracts into the run, which is tough psychologically more than anything else. Because, you know, at the current price, you know, 150s are like a very attractive contract. But, you know, if we drop to 100, all of a sudden, then you can buy 120s, 130s, which are much higher probability of printing. No problem, Harry Balls. I will say that there is some interesting things going on with GameStop's liquidity right now. And it's possible that in an effort to get XRT off of Reg Show, that, you know, they've kind of pushed that liquidity to its limits, and now they're winding that back down. That's something I think we'll find out this week. Not only positionally, but, you know, with the net delta, and if our price begins to drop, if we start to see shares return to the borrow rate drop or stagnate, all of those can be pretty good indicators of, you know, them having successfully handled the liquidity crunch. If they haven't, we will continue to see borrow rates rise. We will continue to see very volatile midday price action. So we'll be watching that. No problem, though, guy. Happy Sunday, dude. What do you use to see a graph of IV30? Where's this been in the past? Oh, you can use bar chart. Bar chart, I believe, has the IV30 graph for GameStop. Tell me we're going to hit 800 to 100 this week. I mean, I fucking hope so. That'd be cool. My October calls don't care, and my June puts would love it. It gives me a lot more ammo to buy in for June. When shirt off again? Not anytime soon. You've gotten hooked on my traps, and you're just gonna have to wait for them, Johnny. All right, guys. Thank you so much for tuning in. If you have any other questions, or I know non-members can't talk on here, so if there's something really important, you can reach out to me on the Discord, and I'll try to get back to you before tomorrow. Yeah. I'll see you guys. I'll see you guys tomorrow morning. Have a good one, everybody. Enjoy your night. Oh, and for the Dillionaires, Pickles picks, you know the deal. They'll be up later tonight. I'll notify everybody, but check them in the morning. See ya.